Hey everyone, welcome to another weekly recap. This is Travis. I have my co-trainer, I came up with a cool phrase. My partner in profit, Peter, is on the line. So we're here to share our thoughts on the market this week, kind of cover the general market, what we think, some trades. I will let Peter take the floor because I'm long-winded, so I will end with my usual long-winded rants. I'll break up my rant though a little bit before I give the floor to Peter and actually give the controls to Peter. What I will do is let you all know, for those who are interested, some people are interested in these. I'm on one of those little crazy fast again. This time, I'm trying a new one where I'm on a water fast. I've done liquid fast before. I think a 40-day liquid fast. I think at the beginning of last year. I've never done a pure water fast. The liquid fast, I used to drink green drinks, things like that. But I was like, I've never, or coffee. It starves the hunger pains. I was like, but this time I've never done a pure water fast. That's the only thing I've consumed. So I'm on day 2. So proof that, hey, you can go a day without eating and not die, even though your brain tells you, oh, I'm going to die. This is the stupidest thing you've ever done. So I'm learning to silence that chatter, develop more discipline, and we will see. If I pass out in the middle of this video, you know that's a bad idea. So anyway, I'll email you all, let you know how many days I go. I don't know how long I'll go, but we'll see. I'm going to try to make it at least 3 days. With that, let me go ahead and turn the floor over to Peter, and then
okay.
We'll get started.
I was going to ask, how long are you going on this water fast? So 3 days.
Yeah, it's how the target minimum outrageous. So my minimum was 1 day. That's how we do our goals. Target minimum outrageous. Minimum was at least 1 day. I already hit that. Target is 3 days. Outrageous will probably be about 10 days. And I'm not. We'll see. My criteria for coming off is when I get super weak or pass out, whichever comes first. Do not know it's ready to come off. But for anybody who's experienced with fasting, and huge disclaimer, I'm not encouraging anybody to do this. You should ask your doctor. My doctor's pretty cool. He's familiar with it. He does fast himself, so he knows I do this. Your body is capable of more than you realize it is, and it's just mind-boggling how your body can do. Think about it. People get lost in the woods, right, for 20 days or 30 days without food, and they survive. But when you're around food every day, your brain convinces you that you won't survive unless you eat. But anyway, that's not the thought I was going to have. I don't know. I'll just edit all this out because I'm just rambling now. Floor is yours, buddy.
Okay, thanks, Travis. All right, so welcome everyone to our weekly recap. So I'll go through some of the things I'm doing kind of quickly. Not a ton going on. So you can see my screen, right, Travis? So yep. You can see this is McDonald's. So McDonald's triggered a weekly back here on the 6th. Well, I didn't make my entry point. It would be way too late to try and enter it now. But what I was kind of excited about was this red daily, and Travis and I were just talking about these. So it's at a plus 75 with a red daily. So I'll wait to see when a green daily kicks back in, and that will kind of give me another possible good entry point. So McDonald's is on my radar for doing a credit spread, and I'll probably use price point profits for that one to look at it. And for those of you guys that follow, you know what I'm talking about. As far as my SPY, I have SPY and SPX credit spreads open right now. They're about 45% positive, meaning I'm at 45% last I looked of my credit, which is good because once I hit 80%, then I'll exit out of those. Or if I hit a 50% loss, I'll exit out of those depending on what the market does. The other trigger we got yesterday was Facebook, but because I didn't look at Market Club yesterday, I don't want to enter, although it kind of has pulled back again. So this wouldn't be a bad entry point. So when I looked at it earlier today, it was way up. So it looks like it's kind of filled the gap there. So at the end of the day, I may enter this. I'll probably enter a little bit smaller position. I won't risk as much. But we got a good weekly trade triangle. The only thing I am cognizant of is, it might be at a resistance point. The last time it was there, it fell down, but we'll see. Apple, I always like to watch Apple. You can see it gave you a green weekly if you got in here on the 10th. You're doing pretty good right now. So Apple's another one I'm going to look to get into a credit spread. Starbucks, I don't know why I haven't been. I know this is one of Travis's favorites, and so this one's really on my watch list. Missed my entry here, so I'll look for Starbucks to take a rest, and when it does that and gives me a new entry point, I'll look at Starbucks. Costco is another one. So you can see all great entry points that I completely missed. So those are what I'm looking at. What I've done right now, I had a Buffett strategy cash secured put on SPY. I bought that one back. I was able to keep 80% of my credit. Well, it was like 77% of my credit. And what I did was I turned around. Let me see if I can pull up my spreadsheet here. It's on another screen, so I'll bring it in. What I did was I turned around and sold another one. Oh, I didn't put it in my weekly. But basically, I bought it back, and then I turned around and I just did the 20% calculation again and sold another year, so into next June or June 2020. That brought what that did for me, which was really nice. When I first started this trade, so I was invested about $300 in those call options. Well, as of right now, doing what I just did, my call options are free with a profit of 312, no matter what happens. That's my worst case scenario. So, and my call options, if I were to calculate them right now, if I sold my call options, I would earn an additional $1,200. So the Buffett strategy that Travis gave us is just a phenomenal strategy because if worst case scenario happens and the market crashes, that's actually the scenario I'm really looking for. My cash secured puts, or my covered calls, I mean, those are free trades, so I'd just sell them out at a 50% loss, which would be money in my pocket. And I would eventually get exercised to buy SPY at an all-time market low. So that's what I'm looking for. The only other thing I did, I have my AT&T covered calls. They're in the money right now. They expire this Friday. So what I did was I sold a cash secured put in the money to basically take the place of what I'm expecting will happen. So if AT&T stays above $32, my covered calls will get called away, or my shares will get called away. I want to keep those shares, but I don't want to give up my covered call income. So the best way to do that for me was on Monday, if my cash secured put doesn't get exercised, on Monday I'll just buy my shares back. So the worst case scenario in this whole thing, because I sold a 33, you can see it right here on my spreadsheet. I sold a $33 cash secured put here for $245. That's what I got for them, 5 of them. So the worst case scenario is AT&T falls below $32 or let's say $31. I'm going to get exercised on the $33, which I'm okay with because I wanted to add to my positions of AT&T, and my 32 calls won't get exercised. That's really my worst case scenario. Best case scenario is AT&T stays right around the 32 and I don't get exercised on either one of them. I guess that would be the best case scenario because I'd keep all this revenue. But basically that's where I'm at with my AT&T. Bottom line is I'm covered. Either way, no matter what happens, I'm not going to lose any money. So that's always the best case scenario when you don't lose money. So that is it, Travis.
Oh, huge disclaimer there. You know, you're not going to lose any money. That's impossible. I still get a kick out of that, how people think that's impossible, but everything's possible when you have the right education and the right blueprint. It's not always 100% possible, but go ahead.
I'm sorry, I didn't mean to cut you off. I always do that to you, and I apologize. It's only impossible right now because, huh?
I was like, I'm used to it. I'm married.
I guess the only reason I say that is because I could. Oh, what I didn't put in here, and I'm going to be doing this, is I'm going to be buying insurance for. I already have insurance on the other shares I own. I'll be buying insurance for the $33 put. I'm buying a $35 protective put. That goes over a year. It's about 18 months. Mm-hmm. So when you have protection, you know, so my max loss if I did nothing would be $1,700 because that is what those puts are going to technically cost me, the extrinsic value. So you can say that when you do things the correct way. You can't say that if you don't have insurance. You know, it's impossible for me to lose money on a car loan if I have insurance and I pay it, right? If I total the car out, it pays the loan off.
Yep, that's true. That's the same principle at work, but people just don't know you can do that in the stock market.
Yeah. So I've been fortunate enough to put myself in a position where my worst case scenario, still I don't lose any money.
That's the goal. That's the goal. That's what we try to go for.
Thanks to Travis, though. So.
Well, thank you there, my friend. And let me go ahead and share my screen. And what I will do is cover the market thoughts real quick. But what I want to do is the market's going up. Let's pull up a one-year chart. The market is near its all-time high, which Peter talked about. I use Market Club primarily for 90% of my trades. It did give a signal fairly recently that this up move was going to happen. That's the signal I was talking about where I didn't kind of trust it. But what I want to do is scale out because people got kind of jittery here when the market had a little small correction here of about 5%, give or take. And when it's happening in real time, it feels scary, but sometimes you have to take a step back and look at the bigger picture. And so when you scale out to a 5-year monthly chart, you will see that. And actually, so now I have to get my chart set up. So now what we're looking at is a 5-year monthly chart. You will see that little correction that we had in May was only the first down month in 2019. So you're like, well, that's not a big deal. You know, it's only been down 1 month. And if you look at the moving averages, this is a 7-month moving average. Prices didn't even really close below the moving average. It was just like a small blip, right? They touched the moving average. So in the big picture point of view, this is where buy and hold investors kind of have a benefit is they don't worry about this because in the big picture, it wasn't even a big deal. It was one down month and it didn't even close below the moving average compared to like the corrections in 2018 where prices clearly closed below the moving average and actually touched a 200-month moving average. See, we didn't have any of that. So when it's happening, it may feel scary. You're like, oh, I'm losing a bunch of money. But sometimes you have to step back and like, okay, let me look at the bigger picture. Is this really that big of a deal? And in my opinion, it was not. All right, so next what I have is some stocks pulled up in Market Club. And real quick, I have Investors Business Daily pulled up because that's one of the tools I use to kind of find stocks and kind of look at the stocks, the fundamentals to see, you know, do they have good earnings? How are they doing compared to their competitors and things like that? And if you're part of the Success Academy, we go through that. You've probably seen it sometimes on these live videos or definitely in the case study videos. But like it changed already. One of these stocks up here, the stocks on the move, the up in price, it did show Lulu was up there. Lulu and Now. So if I hit view all, Lulu and Now were two stocks that were on this list earlier. And so that's one way you could find stocks. And let's go ahead and pull Lulu real quick because what I wanted to do is pull up a 9-month chart and you can see the volume is picking up and Lulu is going up in price. And so that's why I was saying institutional investors, I always say institutional investors are what move the market. So here's Now, volume is picking up there and Now is starting to take off. So I don't know if this will continue, but that's one area sometimes I discover stocks that are about to take off in price. So lastly, what I want to do is pull up my portfolios, just give a quick snapshot of my portfolio performance. So trading for a living, case study is up 49% for the year so far. This case study is based on the one stock blueprint that we talked about in the Success Academy. And Peter, that was on our May 1st live call. So go back, review that live call. I covered the one stock blueprint. You can download this handout, you know, because this case study is pretty much based on that one stock blueprint. The core case study, the one we've become popular for, the 5-year retirement plan, we're now on year 3, where we're taking 10 grand, turn into a 6-figure account in 5 years or less. That account is up 73% so far this year. So 25 grand is turning 44 grand because again, we're on year 3. And what else I was going to do? Oh, just today alone, let's look at to performance today alone because the market was up before we started recording. So profit and loss day is 4,500. So just on the market's move today alone, this portfolio is up $4,500. So that's what I like to see. But it works in reverse too. So when the market's down, the portfolio could be down 4,500. So you have to get emotionally comfortable with that level of risk or seeing your account yo-yo and trusting the blueprints. And that's where I'm going to leave off with fear. Because the email I sent out caused some people to have fear. We had a poll on our last Success Academy live call about, do you fear market crash? I was thrilled that, so out of our entire community that was on that live call, none of them were scared of a market crash, right? Yeah, none of them were scared of a market crash. So, so it was 0 yeses. Did I say 0 no's? Do you fear market crash was the question. We had 0 yeses. Right, we had 73% were no's, right? So no, 73%, the large majority of the members did not fear market crash. That's based on what they're learning. They have no reason to fear market crash. And then the rest of them were kind of 50-50. And one of the guys who was 50-50, he said, well, you know, he's 50-50 because he knows about the insurance concept of insurance, what we're just talking about, but he just doesn't have the money to buy the insurance to protect his larger holdings. And so what my mentor taught me to do is don't be a victim. If you have fear, then devise a plan to compensate or overcome that fear. So if you write down your fears, what do I fear? For my personal example, I used to fear dying early, like my dad, and then leaving my kids without a dad. But it was mainly a financial thing. I was like, I don't want them to struggle financially like I used to. So, but once we got life insurance, that fear went away because that I addressed that fear. So you write down your fears and you devise a plan that will take care of that fear, and you will find that it's a weight is going to be lifted off your shoulder. So if you have a lot of fear that, you know, wow, I'm going to lose half of my life savings in the next market crash, do something about it. I can't tell you what. I'm not a financial planner. I can't give you a plan, but I would devise a plan. And one of my plans is, the obvious one is also usually the one most overlooked. The best way to not lose half of your life savings in a market crash is to not put yourself in a position to lose half of your savings in a market crash. So think about that. The best way to not lose money is, no. The best way to not lose a lot of money is to not put yourself in a position to lose a lot of money. That's why I don't have a fear of a market crash, because I don't put myself in a position to lose a lot of money. Even if I had a traditional mutual fund, I will come up with a plan. I'm not telling you to cash out or anything like that, but I would definitely come up with a plan. Even if the plan was as simple as typing my mutual fund signal symbol in Market Club, and when I get a monthly red, you know, transition my mutual fund to a money market fund, something like that. Again, this is not investment advice, but I'm showing you that you don't have to be helpless. You can actually address that fear. So I would write down that fear and then come up with several plans that would actually work to solve that fear. And so with that, I am done. Do you have anything final takeaways, Peter?
I do not.
All right, so that is it. As long as this video is not too long, I will do an outtake of what we talked about, where Peter was sharing his thoughts on an email and how he kind of addressed that fear or that uneasiness he had when I sent out an email. If you don't see that after this, then it was too long for this weekly recap, and we will just upload it in the Success Academy. It is a bonus video. But regardless, we thank you all for watching our videos each week. If you're watching this on YouTube, just go ahead and subscribe to the channel where you get more. Until then, take care. See you next week. Bye-bye. So apparently I'm going to do an outtake of this video, depending on the length. And I sent out an email to members sharing how we got a new signal to enter S&P or SPY, but I didn't trust it. I thought maybe it was going to be a fake out. The market would go up and then crash back down, cause some fear in some people. So we're going to do an outtake where Peter is sharing his thoughts on that email I sent.
So your email affected me in a very short term, in a negative way. And I don't mean this.
Yeah.
Okay. I feared my positions the minute I read your email, because it came out the day after I submitted my positions. However, the first thing I thought about was, all right, well, Travis, I haven't caught Travis talking out of both sides of his mouth. So he's not going to teach me a blueprint And I followed the blueprint and then turned around and sent an email saying, yeah, oh, by the way, I don't trust my blueprint anymore. That was the first. The second thing was, so I looked back at it and I said, look, I have to be committed to the decisions I make. Even if they're wrong, I have to take ownership. They're my decisions. So, you know, as I read through your email, and I always read it a couple times, the first thing I did was I sat back and I reflected on it and I actually wrote notes down. And that's what I'll do my video on, because I think that's what's causing her panic right now, or her, oh, if I sell so far out of the money, there's no way I'll get assigned and I'll keep that cash. So even though I'm risking a lot, you know, even if the market crashes like Travis was saying in his email, or if it doesn't continue up, I'll be good to go.
You just said something though. My email, like maybe I need to, and I just wrote the email on the fly. Maybe I need to slow down, because I didn't say I didn't trust my blueprint. I said I don't trust the market.
I know.
I said, but I traded what I. Go ahead.
But in the email, you alluded to the fact that you didn't trust the signal. That
oh no, no, I don't.
You don't trust. So, all right, let me pull up.
Yeah. Because think about it. Because I showed previously how Market Club gave.
Right.
See, no, I trust Market Club. I just didn't trust the signal, because if you look back at the previous correction, we got a signal that the market was going up 2 days. As a matter of fact, it didn't go up. It immediately went down the next few days. But Market Club kicked back in. So it's like, no, I trust Market Club because I know it's going to get us out in time. But sometimes the market will produce fake outs. That's what I don't trust. So that's what I mean by that.
Right. So, but in your email, so when I read your email, Spike just triggered a green weekly, but I don't trust it. However, I trade what I see, not what I feel. Okay. So that was my first thing. So I had to actually go through your email. I had to read it a couple times before I let it really affect me, first and foremost. So that's typically what I do now, because I've gone off the handle too. And you're like, no, that's not what I said. And as I reread it, it's like, oh, yeah, you're right. It's not. So you said, I couldn't shake the feeling of uneasiness and I noticed something I missed before. Maybe that's it. Let's walk down memory lane. You can pull up Market Club as a visual. And you talk about, see how it triggered a green, but then it fell, right? And so I believe that, so initially when I look at it, when I looked at your email, I put down my feelings, like what you talk about. All right, you talk about how you do this. So I wrote down my feelings to your email. Yep. And then I applied the principles of what I was doing and how I trade to the email. And so after I did that, I was like, okay, fine. If that's how you feel, Travis, that's fine. But that's not how I feel. Because I know that, number one, Market Club isn't 100%. I know that. So I'm going to have losing trades. I know that the other problem with me personally, for my account, is because I'm not really taking advantage of Market Club, I sometimes get in when Market Club is giving us a bad trade signal, which it does maybe 25% of the times. But because I'm not using Market Club 100% of the times, I'm not seeing 75% of the value, right? Does that make sense?
Yeah, sort of like what we were just talking about, somebody not watching our training videos. Yep.
Right. So the thing that, and I wrote down a bunch, and that's what I'll record my video on, to just make it clear that you have to listen to your mentor. So I always listen to you, but I don't implement every single thing you do because I don't think exactly the way you do. I try to think as much like you as I can when it comes to trading, because you are a lot better at it. There's no doubt. I'm not going to catch up unless you stop trading today and in 5 years go back to it, right? That's the reality.
Oh, that's a good point. I never thought about that. Yeah.
Because every time I learn more by continuing to trade, so do you.
Yeah.
And you've been doing it longer, so you're always going to be ahead of me, right?
Yeah.
But my goal isn't to catch up to you or beat you.
Yeah.
That's not my goal. My goal is to think like you. So I have to try and look at it to say, all right, I've been doing it for 5 years. Where was Travis after 5 years? Well, I can go back to your initial videos and see where you're at because you recorded everything. And
Yeah.
I'm starting to feel like I didn't get to the 5-year mark, to your 5-year mark in 5 years for me. I'm behind. It's taken me longer.
Uh-huh.
But there's a reason for that, and I know the reason, and now I just need to start committing more towards that. So I'll record a video on that, but I think some people may have. All I thought about was, if I feel this way and I get to talk to you every week one-on-one like this,
Yeah.
our Success Academy members don't get that. So if it made me feel that way initially, and I didn't make any decisions based on your email, by the way.
Mm-hmm.
0 decisions were made. I had trades out, and I'm like, initially was, okay, my trades haven't lost money. I could exit them. No, wait a minute.
Yeah,
My trade plan says this, this, and this. If I've missed something that you think is something we need to look at in the future, then I'll go ahead and implement it in my next trade plan. But as of right now, I stick to my trade plan.
Yeah.
And I'm glad I did. Because if I had listened to your email and just flew off the handle and exited my trades, I'd be so pissed off. And you know who I'd be pissed at? You. Even though I've made all the decisions.
Yeah, that's how it works.
Right?
That is exactly why I ended the email with, I'm not trying to be a fear monger, because I know it. I know people get all scared when I send out those emails. I'm like, I'm just sharing what I see. People always ask, how did you know the market was going to crash? I'm like, I'm just sharing what I see. I'm not always wrong. Occasionally I'm wrong, but I'm like, well, you get to see it in real life. Well, here's when I was right. Here's why I was wrong. Here's everything I was thinking. Oh, 2 things. I'm cracking up over here. I'm like, why would you record a video? I'm like, why can't we just add this to the recap instead of having two videos?
Yeah, that's true. Sure. Because
everything you just said, can I just add it to the recap?
Yeah.
I can add it as like an outtake.
Okay.
So, well, good stuff.
So, and I'm reading my notes now. My emotional state after reading this email gave me pause to question my trade plan. I had not noticed this, and I had been following the signals. So, and then I went on to say my SPY trade was very aggressive as I was anticipating a Market Club Green Weekly. I got into my SPY because I even confused myself on our last recap. I said, oh, I got on the DMA, and then you said it didn't trigger that. And I was like, oh, no, that's right. I anticipated a Market Club. That's when I got in. So I don't usually do that, but I was looking at, there are times when, if I was a little bit more aggressive, I would be better off. So I'm like, you know what? Let's get out of the comfort zone of waiting for price confirmation and get into an area I'm not familiar with and say, hey, to me, it looks like a weekly is going to trigger here. And if I'm wrong, I'm wrong. I didn't risk a ton of money, even though I screwed up the accounts. I still am not going to lose 50% of my account.
Yeah.
Bottom line is, eventually I came to my senses and I said, look, I went back through my templates to make sure I didn't miss anything. So what you were referring to, sure, that makes sense. I can see that. But at the same time, I'm following the blueprint. And if you're right and we get a red weekly, then I exit the trades and I'll probably place a couple short-term bearish trades because I need to get out of my comfort zone with those two to recoup some of the loss that I'll endure. And then I'll just get back on the wagon. I think one of the things that's kind of cool that with market pullbacks, so we're always fearful of them, right? A lot of people are fearful. You and I don't, to some degree, I'm not fearful of them, but we don't like them when we're in bullish trades, right?
Yeah, exactly.
But if you think about it, if you look back, all the times that it pulls back is just, I'm starting to look at it a different way now. It's like, okay, I didn't get in on this entry point. Like I had a bunch of trades I had placed but didn't execute, and like a numbnuts, I didn't follow up to see that they executed. I just assumed they did, so they didn't. So now I'm past my entry points. I got signals last week, but I don't want to enter them now because now for my blueprint, it doesn't match, right? Because it's past the entry point.
Yeah.
But I'm actually okay with that because the way I look at it, like So I think when a trade does pull back, even if you're in it, so let's say SPY pulls back at the end of this week, because today's Wednesday, today's Tuesday.
Tuesday,
No,
yeah.
today's Tuesday, yeah.
Tuesday.
So let's say Thursday turns out to be bad and SPY pulls back. It's just setting us up for another rebound back up again. It's setting us up for more opportunities and more price points. So I think that's what most people tend to miss about pullbacks. And if they miss the signal, you know?
Yeah, and that was an email too. I was like, it's not really a bad thing per se, because it's produced entry signals. I think it was that email or either the previous one. And I know, I was kind of poo-poo-ish about the pullback, and I really thought about it. I'm like, you know what? There are a lot of people who missed out on that 30% run up in price, and they've been kicking themselves because they didn't take advantage of it. And I'm like, well, this gives them an opportunity, and they'll jump in there. Of course, I doubt the market goes up, 30-something% down, but still, it gives you a chance to get in the game versus sitting on the sidelines again.
Yeah, I missed out on the 30%, but it's like, well, there's nothing I can do about that now. I can't try and make up for it. So
no, yeah, just try not to use it. Well, it's nothing you do about it per se, but I always say use it as a learning experience because you do not want to miss too many of those. Yeah, you definitely don't want to miss too many of those because that's what the experts always say is the best time to build wealth, or that's when you make the most money is during those corrections and pullbacks. Again, like we always say, the best time to invest is during market crashes, i.e. corrections. It's the same principle, just on a smaller scale, because you get in the lower risk entry points and the market usually takes off after that.